What if you could break free from the shackles of financial dependence? Let's pause for a moment and really ponder on that. Imagine a world where you're not constantly worried about making ends meet, where your income is not tied to a 9-to-5 grind, and where you can make choices based on what you truly desire, not what your bank account dictates. This, my friends, is the allure of financial independence. Financial independence is more than just having a lot of money. It's about having the freedom to follow your passion, explore new opportunities, and live life on your own terms. But how does one achieve this? This journey begins with understanding the principles of generating money. It's not just about earning, but also saving, investing, and giving. These 4 pillars form the foundation of financial independence. Financial independence isn't a pipe dream, it's a reality, and understanding the principles of generating money is the first step. The first principle, and perhaps the most obvious, is earning. This is where the road to financial independence begins. The cornerstone of financial stability is a steady income, the fuel that powers the engine of wealth creation. But how do we earn this income? One common and traditional method is employment. Trading your skills, time, and energy for a regular paycheck. But it's not the only way. In this modern era, the opportunities for earning are as diverse as they are abundant. Take entrepreneurship, for instance. Creating and running your own business can be a rewarding and profitable venture. Yes, it can be fraught with risks and challenges, but the potential for financial gain and personal growth can be well worth it. Then there's the realm of investments. Stocks, bonds, real estate, or even digital assets like cryptocurrencies. These are avenues that can potentially generate passive income over time. They might require a bit of learning, some patience, and a dash of courage, but the rewards can indeed be gratifying. But here's the key takeaway. Don't put all your eggs in one basket. Diversifying your income sources can provide a safety net, a buffer against unexpected financial shocks. It's like having multiple streams feeding into your financial river, keeping it flowing, keeping it robust. Earning is the first step towards financial independence. But earning alone isn't enough. The journey doesn't end here. It's merely the beginning. The second principle is saving, a crucial and often overlooked aspect of wealth generation. While the thrill of earning can be intoxicating, the discipline of saving is where true financial strength is built. It's not about how much money comes in, but how much of it stays with you. Imagine saving as the foundation of a house. Without a strong foundation, the house won't withstand the storms. Similarly, without a robust savings plan, financial independence can be shaky at best and elusive at worst. It's your safety net, catching you when unexpected expenses come swinging like a wrecking ball. Now let's talk strategies. First up, budgeting. It's not the most exciting word, but it's a game changer. It's about knowing where your money goes and, more importantly, directing it instead of wondering where it disappeared to. Next, setting savings goals. Want to buy a house? Start a business? Retire at 50? Set a goal, break it down, and start saving bit by bit. Remember, Rome wasn't built in a day, and neither will your wealth. Lastly, consider automated savings. Let technology do the heavy lifting. Set up automatic transfers to your savings account right after payday. Out of sight, out of mind. And before you know it, you've built a substantial nest egg. Saving is the safety net that cushions you from financial shocks. It's the pillar of financial independence. The third principle of generating money is investing, the tool that multiplies your wealth. Investing is like planting a seed and nurturing it to grow. The seed is your hard-earned money, and the nurturing part, that's the investment. It's about making your money work for you, instead of you working for your money. Now, there are various ways you can invest. Stocks, for instance, are a popular choice. When you buy a stock, you're essentially buying a piece of a company. If the company does well, so do you. Bonds are another option. These are like IOUs, where you're lending money to a company or government in exchange for a fixed return over time. Real estate is a more tangible form of investment. You buy a property and then either sell it for a profit or rent it out for a regular income. But here's the thing. Investing isn't just about throwing your money into the stock market and hoping for the best. It requires financial education. You need to understand what you're investing in, the risks involved, and how to manage those risks. And that's where risk management comes in. It's about spreading your investments across different types, so if one doesn't do well, the others can pick up the slack. This is called diversification, and it's a key strategy in any successful investment portfolio. Investing is the vehicle that drives you towards financial independence. It's the engine that accelerates wealth creation. The final principle, and perhaps the most rewarding, is giving. It's a principle that goes beyond the realm of personal finance. It is, in essence, an investment in the human spirit, one that pays dividends in the form of personal fulfillment and societal growth. Giving back is not just about philanthropy or charity. It's about acknowledging that our financial health is interconnected with the health of our community. When we give, we are investing in that community, nurturing its growth, and in turn, enriching our own lives. Think of it this way. When you plant a tree, you're not just investing in that single sapling. You're investing in the soil, the air, the ecosystem. And as that tree grows, it gives back, providing shade, producing oxygen, even bearing fruit. Your act of giving, much like planting that tree, has the potential to create a ripple effect of positive change. But giving is not about expecting something in return. It's about understanding that the act of giving itself is the return. It brings a sense of satisfaction and joy that wealth alone cannot provide. It's about realizing that true wealth is not just about having, but also about giving. Giving is the act that completes the circle of financial independence. It's the principle that brings balance and satisfaction to wealth creation.